Hello, I'm Lelda Smits for modernwallstreet.com, and joining me on Wall Street on Fed Minutes Day is Stephen Guilfoyle, Managing Director of New York Stock Exchange Floor Operations at Deep Value Execution Services. Stephen, great to have you here today.
The pleasure's all mine.
Now, the Federal Reserve has today released its July board meeting minutes. How did the markets respond?
You know, they responded kind of like a kid on a roller coaster ride. Yeah, the market was getting beat up all morning in anticipation. Also, what came out of China and what came out of the sale of oil today. We had a lot of pressure on the market. The minutes were released early by accident by Bloomberg, about 10 or 15 minutes early, and the market immediately took off. It seemed like everybody was pretty satisfied that this was a dovish statement. Then they read more into the statement. They saw that there was really kind of a tug of war going on at the Fed, and the market sold off throughout the rest of the day, and it actually closed near the lows.
Okay, and what did the meeting minutes suggest about when do you believe the right time will be for the Fed to hike rates, the first time since 2006?
You know, my takeaway is that there's really no consensus on the FOMC. And we certainly have a couple of doves that don't think this is the right time. And we certainly have a few hawks who, like myself, think they probably should get interest rates off zero, start normalizing, just in case down the road we have an issue where we have to
So you would like to see September?
I personally, if I was in the FOMC, yes, I would vote for a rate hike in September. In fact, I would have voted for it already because I think we need to have that Fed funds rate up around 1%.
Okay, but generally, how has today's meeting minutes impacted futures or trading expectations for when the next rate rise may be?
You know, I mean, odds probably are lower now for a September hike, being there's no meeting of the minds. So the latest odds I saw were down around 35 to 40% for a hike in September, which pushes it back to December. Also impacting this, we have whatever happens in China, which certainly can change how the Fed thinks on any given day. And these minutes are from the meeting that ended on July 29th. So it's not what they're thinking today, it's what they were thinking on July 29th, which, given what's happened since, means there probably won't be a rate hike because what's happened since would tend to make people think more dovishly than hawkishly.
Okay, now you did mention today was a bit of a roller coaster day, but generally we are in the slower summer months at the moment. What are you expecting when we start to see those slower summer sessions come to an end?
Well, hopefully we'll see a return of volume, trading volume has been pretty awful now for about 2 weeks. This mid-August to September time is a time when a lot of Americans take vacation, and it's been a time where trading volumes have been, I'd say, maybe 12% below the norm. So hopefully when the kids get back to school and traders get back to work, we'll have the volume that will return, and we'll have to play the game the way we see it. And September and October are sometimes dicey months for the market.
Okay, well, we'll certainly be looking forward to catching up, hopefully with you, with the months coming up. Thank you so much for your insights today.
Oh, you're welcome.